Welcome back for the 14th episode of CBA's Talking Economics with the Commonwealth Bank of Australia's Chief Economist, Stephen Halmarick. Stephen, thanks for joining us.
My pleasure, thank you.
So the RBA left rates on hold again for the month of August. What was their thinking behind the move? I mean, did it surprise you?
Well, it did surprise us. We were actually expecting a rate rise on the day. But the Reserve Bank gave three main reasons why they held rates steady. Firstly, they've done a lot already, so interest rates are up 400 basis points, so from 0.1% to 4.1%. And so they wanted to leave time to assess the impact of those higher interest rates on the economy. There's some lags involved between when interest rates rise and when people are actually paying those higher rates. So they're looking for time to assess that. And they also talked about uncertainty, particularly around the global economic outlook, and as well as here in Australia. So it really was a case of they've done a lot already, needed a bit more time to assess the impact.
So looking ahead, how does that affect your forecast for the RBA?
So we actually now have come to the view that the interest rate increasing cycle's at an end. We think that there's no more rate rises. The risk is perhaps one more, but our base case is that the rate hike cycle is done and the Reserve Bank will now hold the cash rate steady at 4.1% for an extended period of time. As we get through 2024, we are expecting them to turn their mind towards lowering interest rates, which could get underway late in the first quarter of next year.
And what sort of data should we look out for in the near term?
Well, the key numbers, again, are wages data. So that's out on the 15th of August, expecting continued signs of some upward pressure on wages growth. We get employment numbers on the 17th of August, again looking for some employment growth, but the unemployment rate likely to start drifting up a little. And then the all-important inflation number for the month of July is out at the end of this month. And again, we'll be looking for some further moderation in the rate of inflation.
Well, as always, Stephen, appreciate your insights. Thanks for your time.
My pleasure. Thank you.